May profits be upon you. Welcome back to my YouTube channel. This is RT Money representing Lions Den FX. And we're going to take a look at pound yen and see what's ahead for us in the week coming, right? In the coming week. All right, let's do it some top-down analysis here. All right, and we're going to take a look at the weekly. Now we can see price has been bullish since 2020, right? And it's made a series of this impulse to the upside here, where we break this high. All right, this is a what should have been a lower high after making this lower low, but we didn't get past this on the higher time frames. We didn't get past it, right? We didn't break below this low, so price came on up. All right, we took the liquidity from that low point, but we didn't have a close below. Remember, I went over this a couple of times in a couple of other videos. Just check my videos, you'll see I always repeat this. But we did break the high here, and that's important because it indicates price is bullish, right? If you didn't get it from this point, once we break highs, you start saying, oh, all right, no, I get it now. Okay, all right, so we're in this consolidation here. All right, and it's a pretty well-defined range, don't you think? All right, and with that being said, you can do your range plays here, right? You can say, hey, whenever price reaches the top here, I'll just take my shorts, and whenever it reaches the bottom, I can take my longs, right? You can do that. But what we're looking for is the breakout. Is it going to break to the downside, or is it going to break to the upside? And typically what market makers like to do in these kind of situations, they like to take out the low, then take the high. They take out the stop losses here, take out the stop losses here, and then they go to their intended move, right? Or they'll do it this way: down, take out the lows, high, take out it, and just keep going, right? So that's what we got to be careful of. Now, what we want to do is take some things into consideration. One is weak highs, weak lows, all right? If we see that price made this high here, right? And we say, okay, this is the last break of structure here, right? This is the last break of market structure here. So price turned bullish here, right? Price then comes down, and you expect a return to impulse or a return to the origin. Well, price did exactly that. Check this out. It did not break that low. It respected the low that made that high. All right, what does that mean? What does that mean? It means, one, this is going to be a liquidity point, all right, a target for liquidity, all right? But more importantly, this low was protected, and it is a strong low, all right? This is a strong low. Why? Because it broke the high here, broke structure here, and made a new high. You understand that? Okay, good. All right. Now, what does that say for this high? The high didn't make a new low. It didn't break that low. It didn't break the low that created the high. That means this is a weak high, and weak highs are targeted for liquidity. Okay, keep that in mind. All right, just tuck that in your pocket real quick. Okay, so price comes down, all right, returns to impulse, RTI, and you expect price to continue and break this high because it is weak. It didn't break the low, so you expect that high to get ran. All right, at least I do anyway. Okay, and what we have here is near equal highs. Price tried to make it past that, make a new high, failed, pulled back, came back higher, took out these highs, swept the highs here, all right, for liquidity. Oops, I didn't mean to put that there. Sweat the highs for liquidity and then pull down. Pull back again, sweeping for liquidity. What are we doing here? Okay, sweeping for liquidity. All right, this is not a break of structure now. This is just a liquidity grab because this is substructure. Why? Because this and this are our the trading range high, the trading range bottom, low, excuse me, top and bottom of the trading range, right? The high and the low. All right, and until price breaks that high, we don't have continuation of bullish momentum. Until price breaks this low, we don't have a shift in market structure where it has turned from bullish momentum to bearish momentum. We don't have that yet until this low is broken. All right, we have a weak high that it looks like it's going to be attacked. Now we come to more relevant, the more current price situation. All right, the price action here is really important. Let's look on the daily, and what we can see is price playing out. Look at that momentum. Look at the momentum, the bullish momentum going up. We have to make note of that, right? Now, what we need to notice is, where did this low go? Didn't go down here, didn't break a low. What does that say for this top, this high? It's weak. That's right. That's a weak high. And it's going to get ran for liquidity. Oh, it was ran for liquidity. Well, look at that. And from here, we break the low here, this little substructure low here, and we break this low, but we didn't break this low. So what does that say for this high? That's right. It's weak and likely to be ran for liquidity. You see how this works? So I'm expecting price to continue bullishly with that momentum. Look at that momentum, man. Look at that momentum. Did you notice that we swept the highs here? If I can just get it right. Yeah, we swept the highs here, man. You got to follow liquidity. We swept that high. So that's not even a liquidity point no more because we done took it already. Price is building up and taking liquidity for the bigger move. What do you think that move is? Well, we have near equal highs up here. And we have weak highs on top of that. So that's what I'm looking for. I'm looking for a sweep of these highs. That's it in short. All right. Now, after every break of structure, you expect a pullback, just like it did here, a return to impulse. We came all the way down. We failed to make a new high. Try it again. Came a little lower, coiled back, and now we're shooting up again with a lot of momentum. So I'm expecting that to continue. This is the yen. All right. This is weak. Look on the RT money meter. All right. Look at the yen, -548. That's the score it got. Last week, it came into the week at -434, right below euro. Again, right below euro. Euro got a little stronger, even though it's still weak. It got a little stronger, but yen went the other way. And look at the pound. It got a little stronger. Last week, it came into the week -1.64. This week, 0.42. All right. It's kind of neutral bearish, if you will, but it's better than it was just bearish last time, right? It's gaining strength. And against a very, while it's getting stronger, the yen is getting weaker. We're going to see this. We're going to see this kind of stuff. We're going to see this kind of impulse. And while it's impulsing up, I'm thinking it's just that impulse is just going to continue. Now, I want to point one other thing out to you on the 4-hour. Okay. Something I like to make a point of noting. All right. Matter of fact, it's better to outline it on the daily. All right. We broke supply here. See this buying before the sell starts, that sharp selling. I'm going to mark this as supply all the way up. right? This is supply. And what you have to see is we broke that supply. So now, because we broke through that supply, I want to see where the reaction was. All right, I want to go down to the 4 hour, and we're going to see that reaction with some close up of the price action. Right. This is where I would be looking, where the buying starts, and then the energetic selling. This is how I mark my order blocks. And you see how price reacted, came up and reacted to this supply. This is the extreme of the supply. And this is something, for later. Because if price comes back here, I'm going to be looking for buys, excuse me. I'm going to be looking for buys at this demand. Oh, I'm going to be looking at buys from this demand. This is something to look out for later. All right. But what you want to walk away with knowing is demand is in control. Supply was broken here. Okay. You can, excuse me. You can, if I could just get my life together over here. This is a broken supply zone. All right. Once price, violates that protected high, we turn it gray. And what you want to do is make sure you make a note of where price turned from where it flipped from supply to demand. All right. Because if price comes back here, this is going to be a high probability trade. All right. You can refine it down here, but this is where the selling starts before the energetic buying starts. And that's the way I mark my order blocks. Okay, my supply and demand zones. Anyway, if price comes back down here, you keep your eye on it. All right, but from here, I believe price is just going to continue bullishly. I honestly believe that. All right, so what do we have here? We have another flip zone, don't we? We see price try to form a supply here. All right, with that bearish engulfer. Right, price comes up, and then we have this. Right, boom, boom. On a lower time frame, on the 15-minute time frame, you can look here in this area and say price may want to return here. May want to return here. And this is the area I would be looking for price to return. All right. It could happen here. It can happen here, but this isn't a reaction to this supply. All right. It could be, it could be reacting to this mitigation point here. Sure. And price could come on down here. So I would definitely be taking a look at this whole area. If price comes down here, we have a, what do you call this? That's an imbalance. All right, we got an imbalance for price to fill between the bottom of this wick and the top of this wick. This is an inefficient price move. Price has to rebalance the imbalanced, right? And you like seeing that on the way to a demand zone. So if price gives us a pullback, I'll be looking in this area to take a long position. But I do believe price will continue higher because I don't see, price isn't saying, hey, we're about to turn around here, okay? Not yet, okay? I'm gonna look up ahead and look for a higher time frame zone of supply. But because these are weak highs, I believe those will be targets for liquidity. All right. So bear that in mind. All right. Could it turn bearish? Of course it can. And we could turn bearish right here because this is the last zone of supply here. And we're about to hit that zone. We're about to hit it. But I do believe we'll ultimately take it out because this zone has been mitigated already. So I do believe we're going to come through this. Maybe we'll have a reaction down to our POI here, and then we can take it on up. Huh? What do you think? What are your thoughts? Leave me a comment. Give me some feedback. All right. I will see you in the next video. I'm gonna leave 2 videos for you to check out. Some other forecasts, 2 other forecasts for this coming week. And I hope you enjoy them and get something out of it. And leave me some feedback. Don't forget to hit that like button. All right. I'll talk to you in the next video.